Good evening, this is Ryan Mallory for SharePlanner.com. Today is October 7th, 2010. It's the day before the big unemployment number, and right now I believe we are currently sitting at about 9.6%. Interesting news article came out from Gallup about the unemployment tomorrow, saying that the government will likely be underestimating their numbers. Gallup expects a unemployment number to be about 10.1% right now, and they don't expect the government to report such a number. So that should be just in the back of your mind going into tomorrow. There's no way to know, obviously, what the number is going to be, but you can try to go through your head what kind of scenarios we might see, what we would like to see from a bullish perspective. And I'm going to zoom in on the S&P 500 here. Looking at the chart, we are just above this downward trend line that I drew all the way back from October of 2007, and it goes downward very nicely here, but then we had a breakout back on Tuesday when we had that 20 some odd point rally. We also negated this channel that the market was trading in, though it seems to be keeping this particular trend line in the back of its head, as for 2 days in a row here we found support at that upper line of the rising channel. So still, I'm not overly concerned. If we would have had a lot bigger candle today, I would have been a little bit more nervous about going into tomorrow's unemployment number. But as you can see here, you almost have yourself a little bit of a handle or a hammer here, and I think there's a good chance, as we have been a lot lately, finding a reason to rally. So I think tomorrow there's a good chance that we'll probably rally off of the unemployment number. If not, then it's probably a good idea to start tightening your stop losses. For instance, tomorrow, if we gap below today's low, so that would be about if we open up 7 points lower today, 7 points lower, where we're below today's low, I would be very nervous about having any long positions in the portfolio, because to me that would be a very negative sign for this trend. However, best case scenario is we gap above this candle here, which is about 1163. So if we gap about 6-7 points higher today or tomorrow, I think there's a good chance this rally will run. Anything in between, I'd probably recommend tightening your stops, just because the market could just decide to rally or to sell off on a lukewarm report. So if we don't get that solid, strong response tomorrow where we're gapping above today's open or today's high, I would definitely tighten the stop losses quite a bit. As for me, I'm about 91% long in this market. I sold out of Delta Airlines, thank heavens, because that stock was just about as bipolar as it gets. Typically it would sell off in the morning and rally back in the afternoon. But, despite Tuesday's rally, the stock has really done nothing for me since I've owned it. It basically hovered around break even. I sold it for a small profit today. But even still, I am glad to be done with that stock, because it just did not live up to its billing whatsoever. But tomorrow, I would definitely have your stop losses in place. If the number's a miss, which I don't want to get too conspiracy theory oriented here, but if I have a hard time believing it would be a huge miss tomorrow, simply because we are 1 month out of the midterm elections. This is probably the most important employment number for both parties going into the election cycle, or going into the election day. And the thought of them allowing for this number to turning out to be very negative, like a 10.1 or 10.2 unemployment rate, or a huge miss just in general, I don't really foresee that happening. So tomorrow, here's what you want to be looking for: a gap up above today's highs or near today's highs. Good chance we rally pretty strong, maybe see another gainer like we did on Tuesday. If we gap below today's lows, I would probably be convinced to sell my long positions and wait for a little bit more rosy, a more rosy situation to go long in, or at the very least, and I may even do this instead, hedge my position, hedge my portfolio 1-for-1. So that is definitely something that I'll consider doing. So a few new or one new position in the portfolio today. PAG, that is Penske Auto Parts. Let me zoom out here for you to see that. You got this double bottom. If you read my post earlier today, you got this double bottom, and that post had all the trading parameters, but I'm going to shoot from the hip here. I got in at around 1335, and it finished down on me on the day, but overall the thesis still holds up, which is definitely a solid development. You can see that the double bottom is almost nearly symmetrical on both sides. Has the support of numerous moving averages underneath. Place to stop right below this 20-day moving average, so it's about 1952 or 1252 if I remember correctly. BEAV, I added this yesterday. Big disappointment to me today, and just how it responded to how it just responded to the general market today. Best play yesterday for me, worst play for me today. But it did consolidate near its highs, but did give up about 3% of its gains. A little bit weary about that. I could, especially if the employment number tomorrow is lukewarm or not so great, or just the response in general is not very enthusiastic, I'll probably tighten my stop on this sucker to today's lows, so around that 30.90 level. The other couple of plays that I had is Thai. Thai was also a downer for me today. Quasi double bottom chart here, still in consolidation, testing the lower range of it. Oh, let me go back to Thai here real quick too. I'll also be looking at possibly cutting my losses in that if we don't see a better response out of it tomorrow. URS, nice little breakout play that didn't really materialize either today, mainly because of market conditions. But you know, if it can retake this support level here, it could see a nice move into the lower to mid 40s. So that's about it for now. Y'all get some sleep and get some rest, and be ready for tomorrow. Don't sleep in past 8:30 because you'll miss all the excitement possibly. All right, so long.